Welcome back. Well, the government made some decisions to avoid the so-called fiscal cliff.
Yeah, but what about your own personal fiscal cliff? Do you feel like you're falling or failing when it comes to saving and planning for retirement? Today, free help from two gals who know money like the back of their hands. One a financial expert, the other a marriage expert who knows the importance of money talk. We have Karen Ellenbecker and the People Pro, Barb Bartlein. Always nice to have you guys here. Thank you so much. We're going to talk about a free seminar that you have coming up tomorrow. In just a second. But first, let's talk about this big myth that many people have that they believe about their retirement and the money. What's the biggest myth?
The biggest myth is just keep saving, and then when you retire, your income, here's the myth now, will be less than what it is now. Well, maybe yes, maybe no. Too often people don't keep in mind that they may be getting pensions, Social Security. You might not be in a lower tax bracket. So here you've got all this money saved that's been tax deferred, and boom, you got to start paying taxes on it. In fact, some people have to pay up to a third or more that really the government's going to get. You're not going to get it to go plane and go to Belize and all the good things that we want to do.
Right? Well, yeah. Well, I mean, when we're talking about that, what does that mean in real dollars? What does that mean for take home?
Well, for example, one of the biggest myths is someone will come into my office and they'll say, I am ready to retire. I have $1 million to retire, and we'll talk about where is it, and it's in their retirement account, what they've been saving, salary deferral for years and years, getting their match. And I'll sit down and say, well, you know, what is your tax bracket? And they might say 25% between state and federal. And I'll say, well, you really have $750,000 to retire, because what they forget is that's never been taxed. So they look at the number as if it's all theirs, because nobody says when they're doing all this, thinking that they're going to retire and be in a lower tax bracket, nobody ever says to them, every dollar you save in your retirement account is part Uncle Sam's.
Yes, yeah, and I don't get why we don't hear more about the tax consequences of that money that we're planning and that we're saving for retirement.
Well, because Barb made one of the biggest things. People who have a lot of income, such as pensions coming in, if they still want to work within retirement, anything they take out of the retirement account is added onto the top of all of those. And so dollar for dollar that comes out of your retirement account is added on there, and you pay ordinary income tax on it. And at age 70 and a half, most people have been told, don't take it till you need it. But that doesn't work either, because at age 70 and a half, you're required to take a certain amount out based on your life expectancy. So when you turn 70 and a half, they divide whatever you have in all of your retirement accounts by 24.7 years. And that's how much you have to take out. Now that gets added on top. So I have clients who are in their 70s who are in a higher tax bracket than they were when they were working. Because you have no deductions. You don't have your children as deductions. You don't have your home deductions. You're not taking money out of from your salary, and now you are in the highest tax bracket ever. So taxes is one of the things that people cannot control, because we will go through many different tax climates. What they can do is be cognizant of where they're at, and they can control the risk around the taxes for themselves.
Yeah, how do you minimize that tax bite? How do you actually make that smaller? Is there a way to do that?
You've got to have different buckets. You've got to have different buckets.
What
does that mean?
You need one bucket for tax deferred, one bucket for
tax-free.
Tax-free. You do, and then you also need an additional bucket
which is your taxable, which is your personal assets.
And when you say bucket, are you saying places where you put your money into?
Right. Okay. Right. So, for example, some people have an IRA, and then they also have a Roth. They might have a SEP from their business. They have different buckets.
What's a SEP? Simplified pension. It's another retirement account.
Okay.
Where you can contribute.
It seems like what you're kind of saying, I want you to break it down for us, so we'll make sure we get this point with buckets, is, are you talking about diversification? I don't mean of funds, but are you talking about different places?
It's all about diversification. So here's the ideal situation. You're going to retire, you sit down and you say, how much money do I have coming in from maybe part-time job? Lots of people like to work. How much money do I have coming in from a pension, like Charlie has? How much money do I have coming in from Social Security? And you add all that up, and then you look at what's my tax bracket. So I'm in the, if you're lucky, 15% tax bracket. How much money do I need to live? I need an additional $12,000 more than what I have coming in. So I need $1,000 a month. where should I take it from? If all you have is that tax-deferred bucket and you have to take that whole $12,000 from there, it's added onto your income. But what if you can say, if I take 6 from my tax-deferred, I'm still in the 15% bracket. I think I'll take the rest from my personal assets or maybe from my Roth IRA. Now, you have controlled your tax liability. Uncle Sam isn't becoming your biggest beneficiary. You are.
So I think that sounds wonderful, and I think it's really smart for people who are still in the place to contribute to those buckets. What about the people who need to start drawing? I mean, is there any way to reduce that tax bite once you don't have any more option to contribute?
Yes, you can. For example, you may take some money that's been tax deferred, but then take it and put it back into a Roth. So there's different combinations you can do. The basic idea, though, is don't work your whole life and then just hand it over to Uncle Sam.
Yeah.
I mean, I realize they have some problems in Washington, but
It's not your fault.
I don't feel I'm the one that has to fix them all.
Right.
And you know, and there's really 4 things that individuals need to think about who are listening when they're
Say
thinking about
quickly,
it.
'cause we're about to run out of time.
They need to think about how long are they going to live and how much will it cost to have any type of health care. They need to think about taxes, and you can't wait till you retire to think about taxes. And you need to think about inflation. We all know what the inflation has done to us, and you need to think about the volatility of the market.
Yeah.
You can make the market work for you, both in an up market and a down market. But if you haven't planned for these 4 things, if you really haven't considered the impact, we hear about the fiscal cliff, you know, and we kept saying jump off the cliff because we've already planned for it. The thing is that most people don't plan early enough, and they don't really think about it. So don't listen to all the noise out there. Think about how do these things affect you, because you can't control all of those health care and that, but you can control the risk associated with each one of them. And our big thing this year is be healthy. That's the biggest thing you can do to control the cost on your health care.
And the long-term care. Now, see, here's the thing. A lot of people are going to feel overwhelmed with this information. It's the first time they've heard a lot of this, and it's important. And I think here's the thing I want to point out is that if you're thinking about investing and minimizing your tax exposure, things like that, you need to think about this before you retire.
Yes.
So this free seminar is not just for people who are about to retire or who are retired. This is for everybody, and it's happening this Thursday, January 17th, tomorrow at 5:30 p.m. at the Country Springs Conference Center in Waukesha. Call this phone number that you see on your screen to register, 262-691-3200. It's free. You can ask questions, and all this good stuff will be there.
And we make it fun.
Yeah.
It is,
It is overwhelming, but
and
we
free
do make
food.
it fun.
Free
Yeah.
food.
Free
All right,
food.
we gotta go, ladies.
Love it. Thank you so much.
Fantastic.